online giant Alibaba called Double
When we
11.
think of the people behind the Chinese e-commerce tech giant Alibaba, most of us think of Jack Ma. Few people have heard of his secret right-hand man. Allow me to introduce Joseph Tsai, the financial and legal wizard that turned the Alibaba dream into a trillion-dollar empire. Joseph Tsai is not as famous as Jack Ma. However, he is actually more powerful and essential than Jack Ma for Alibaba, especially in the early years.
I'm still worthy.
More importantly, he's an excellent case study of how a young and ambitious Chad with a decent career can transform into a giga-Chad billionaire with a massive sports empire. At the peak of his career, Joseph Tsai makes a life-changing decision that even the most alpha Chads will struggle to do. In 1999, he leaves his prestigious six-figure job at a top global private equity firm to work for a tiny startup with 17 youngsters in a small apartment in Hangzhou, China. This tiny startup is called Alibaba, and it doesn't even have an office or any employees. Joseph Tsai's annual salary at Alibaba? Less than $1,000. Has he lost his mind? In hindsight, Joseph Tsai was a genius. Fast forward 15 years, Alibaba gets listed on the New York Stock Exchange, raising $25 billion and becoming history's largest IPO. As the stock price skyrockets to the moon, Joseph Tsai is instantly propelled into billionaire status.
It's the largest IPO in history. There's a lot of demand and not a lot to sell.
Now, Joseph Tsai sits on a net worth of more than $8 billion and owns multiple major league sports teams, including the NBA Brooklyn Nets.
Meet the new sole owner of the Brooklyn Nets, Joseph Tsai, the billionaire co-founder of e-commerce giant Alibaba, is close to signing a record deal to buy the remaining 51% that he does not already own from Russian billionaire Mikhail Prokhorov, sources confirmed before the show.
In this video, we will explore the rise of Joseph Tsai from a small tax lawyer chimp in New York City to one of the richest and most powerful finance wizards in the global tech industry.
Think of strategic investments and M&A as playing a game of Go. In the game of Go, the objective is to put the pieces on the board, on the chessboard, and surround your opponent eventually. For competitive reasons, we may not always fully explain which direction we're going, but you have to understand that we're playing a game of Go here when it comes to putting the right assets in the right place.
Joseph Tsai is born in Taiwan, and both his parents are lawyers. At an early age, his family moves to the US and Joseph Tsai completes most of his education there. Despite coming from a comfortable family, Tsai is still extremely ambitious, like most of us, and wants to achieve individual greatness on his own merit. He excels in his academics, earning a spot at Yale University and subsequently completes a bachelor's degree in economics and East Asian studies. However, this does not satisfy his ambition. He further enrolls into Yale Law School, the undisputed #1 law school in the US.
So many moments at Yale. I benefited so much from Yale. It's kind of hard to pick out just one or two events.
His goal? To practice law at a top law firm in the largest financial capital in the world, New York City. At the same time, like an all-rounded campus Chad, Joseph trains himself to be an excellent sportsman and represents Yale University as a lacrosse athlete. During these 4 years, his lacrosse team is crowned Ivy League champions 3 times for the 1988, 1989 and 1999 seasons. From a young age, Joseph Tsai clearly manifests his ambition in all areas of life, not just through his grades.
So that's fundamental skills. My other advice is diversity of skill sets.
Overall, these were promising steps for a young and rising business gorilla. Joseph Tsai's only mistake as a young Chad was choosing to play lacrosse as a sport. Lacrosse is not even a sport of the Olympic Games.
We don't do that here.
The reason is simple. Historically, the gods that reside on Mount Olympus rejected lacrosse for being too beta, with little to no effect on creating the physique of a Greek god. Just in case you were thinking about picking up lacrosse now.
Because right now, I'm seeing a hockey stick with a net on the end of it. I'm seeing NFL gear, but we're out on a field on a sunny day. This looks like NFL, NHL, and fishing all combined.
Anyways, eventually Joseph Tsai graduates from Yale Law School and starts working on Wall Street as a tax lawyer at Sullivan & Cromwell LLP, one of the top New York City law firms. As a junior lawyer, he advises on a multitude of transactions, IPOs, deal structures, and corporate strategy. This legal training forms his first step of becoming a well-rounded finance polymath. After 3 years, Tsai has built a strong and specialized expertise in corporate law and securities regulations in the world's largest capital market. However, he is still not satisfied. Joseph Tsai describes that as an associate at Sullivan & Cromwell, he's just a back-office support function for the real Wall Street giga-chat rainmakers of the finance world. He is desperate to be part of the club and be closer to the decision-makers raking in massive profits and returns for their firms.
I thought that the legal profession is all about giving advice, but you're not acting, you're not making decisions. So I wanted to be in a role where I could sort of drive decisions.
It is clear that the practice of law does not satisfy his inner career ambition and mission.
I don't hate it, I just don't like it at all, and it's terrible.
So after 3 years as an associate, Joseph Tsai makes the move in 1993 into a completely different career path. He makes an excellent choice, choosing one of the best career paths in finance that most future megalomaniacs want to break into to achieve money, status, and power. We are, of course, talking about private equity. However, things were not going to be easy for Joseph. He faces a big problem right at the beginning. He is a lawyer and has absolutely zero knowledge on PE monkey work, such as valuation, deal sourcing, and financial modeling.
In fact, I really didn't learn how to do numbers in my first job in private equity.
However, Joseph, the ambitious, high-flying Chad, remains unfazed. He formulates an idea in his mind and lays out a brilliant strategy. He starts his journey by taking up a role as a legal counsel in Rosecliff Incorporated, a management buyout firm based in New York City. Although the role is still mostly legal in nature, he knows that it will be a solid foundation for him to build his expertise in finance and investing in the private markets. After almost 2 years at this firm, Joseph Tsai is offered a role in another PE fund in 1995. This time, though, it is different. Tsai joins the Hong Kong office of Investor AB, the main investment and holding company of the 5th generation of Sweden's ultra-rich Wallenberg family. The Wallenberg family's business empire is one of the largest family-owned conglomerates in Europe, with large ownership stakes in multiple public-listed companies.
The companies of Wallenberg Group account for 30% of Sweden's GDP, taking up 40% of the entire market capitalization of Sweden's stock market.
As of 2019, the Wallenberg family business, which includes Investor AB, is worth almost $200 billion. For Joseph, this time is different. He is no longer the company's legal counsel and back office support. He has ascended beyond that. He joins the team as a private equity investment manager. That means he is now a decision maker. So him and his investment team go on to focus on Asia and set up their base in the financial hub of Asia, Hong Kong. Surprisingly, Joseph Tsai finds that his pillar of legal skills also turns out to be very relevant in deal making and deal structuring, and helps to make the transition to his new position much smoother.
When it comes to private equity, there's a lot of deal making involved. There's a lot of structuring of the investment involved. You can sort of de-risk your investment through structuring. And that's what lawyers are good at.
However, that's not good enough to be a great private equity investment manager. He needs to grow his second pillar of expertise, financial analysis. Unlike most hungry finance chimps looking to break into high-paying finance careers out of kindergarten or even earlier, Joseph Tsai begins to learn company analysis and financial modeling much later in his career.
I worked at Investor AB as a Swedish company that I actually sort of formally learned how to do a DCF model.
That's like an F1 driver who learns how to drive the day before his actual race. Then again, an F1 driver cannot count on his army of chimp associates to churn out models on Friday nights and deliver them by Monday morning. At this point, it is important to take note of Joseph Tsai's progress from baby chimp lawyer to young gorilla private equity investor, and why his strategy to be a polymath is so exceptional. I'm a big fan of building multiple pillars of knowledge and skills. By combining them, we are able to create a unique toolbox of skills, along with a strong, unique selling point in our careers and in our industry. This allows us to stay ahead of the competition and be even more indispensable. Joseph Tsai does exactly that and executes this strategy to perfection. His most defining strength is that he is highly proficient in multiple domains of finance. His first pillar of knowledge is his deep knowledge in corporate law and transactions that he developed as a lawyer in a top law firm. Knowledge in investments, finance and deal making as a private equity investor. Strong proficiency in Mandarin and Chinese ethnic background, which allows him to penetrate many key Asian private markets such as China and Hong Kong. And finally, a deep understanding of both the Eastern and Western financial markets after years of working in New York City, Hong Kong and China. These four pillars form a deadly combination that transformed him into a true finance wizard.
You shall not pass!
And we will see this unfold soon. Joseph Tsai continues to work at Investor AB for almost 4 years, but soon his fate will change when he meets one special man. One day, a business friend of Joseph Tsai introduces him to a startup founder based in Hangzhou, China, to discuss a business acquisition. The founder's name was Jack Ma. Joseph Tsai listens to Jack Ma pitch his idea about constructing a powerful internet e-commerce platform. Jack Ma explains that the goal of his startup is to help small Chinese businesses expand their businesses and sell their products overseas through the internet. Joseph Tsai is instantly fascinated and sees huge potential. So much so that he finds himself strongly considering the thought of quitting his job at Investor AB and joining Jack Ma and his team. Is he out of his mind? Joseph Tsai knows that there is a high chance that leaving Investor AB to join Jack Ma's Alibaba will be career suicide. He is at a very well-paying position in a large private equity firm, earning $700,000 per year. He's also almost about to complete his evolution into a private equity finance silverback, making more than $1 million per year. If he leaves Investor AB, he will lose all that and be utterly humiliated if Alibaba fails. Why should he leave such a comfortable position? Somehow Joseph Tsai senses the gargantuan amount of potential that Alibaba has and the possibility that it can be a revolutionary idea that changes the world. So in 1999 he says fuck it and quits Investor AB to be a co-founder at Alibaba alongside Jack Ma. And from there the adventure begins.
I met Jack through a friend of mine in Taiwan. Jack said, no, I just have a domain name and a website.
Wow.
So then I went back to my friend. I said, forget about merging into this company. He wanted to merge into Alibaba because the name has a .com in it. And he thought, if I can hitch onto this .com name, the company will go public in 6 months and I become a millionaire. That was sort of his thinking. I said, well, this dude in Hangzhou doesn't even have a company. So.
As expected of a startup, things do not start off well for Joseph Tsai. According to Bloomberg, his starting salary was a whopping $50 per month. Holy shit. To make matters worse, Joseph Tsai is also the only Western-educated co-founder at Alibaba. Last but not least, all of the other co-founders are young university graduates with zero work experience and zero knowledge in technology. It is an understatement to say that the odds are stacked against Joseph Tsai and Alibaba. Despite all of this, he immediately gets to work and performs his financial wizardry on Alibaba as the company's new CFO. He first establishes a proper corporate structure and makes sure that Alibaba is ready to be pitched to investors. Then, using his powerful industry connections, he sets up pitch meetings with large institutional investors that could provide Alibaba with much needed capital. Already in the first few months, Joseph Tsai shows that his familiarity with both Eastern and Western markets make him the perfect bridge to connect Alibaba to Western capital. This is possible because of his stints as a lawyer in New York and years of being a private equity investor in Hong Kong, two of the largest financial centers in the world. However, the journey is still far from easy. Both Joseph Tsai and Jack Ma finally arrive in the US to raise capital, but are ultimately rejected by more than 30 venture capitalists. Both Jack Ma and Joseph Tsai know that they are the underdogs trying to pitch a Chinese seed stage company to skeptical investors. Weeks and months go by without much success, and it seems that the Alibaba dream that Joseph Tsai saw potential in is slowly fading away. He repeatedly questions himself if he should have even left his comfortable private equity job, because things are not looking good for his big gamble. But finally, Joseph Tsai and Jack Ma manage to hit a big break. In less than a year, Joseph Tsai's past experience in the US private markets helps Alibaba raise $25 million from SoftBank, Goldman Sachs, Fidelity and other major powerhouse investors. This much needed capital injection is then used to accelerate Alibaba's growth further, allowing it to surpass 1 million registered users in 2001 and capture significant market share within the Chinese market. It seems like this is the turning point that Joseph Tsai was waiting for. With the backing of these large investors, raising capital and expansion will definitely be much easier. Everything seems to be on an upward trajectory to success. But halfway into 2001, things are going to take a turn for the worse. Catastrophe strikes when the dot-com bubble finally bursts.
Weeks.
I'm looking right now at the NASDAQ. The NASDAQ is down 115 points at 3669. And as I look at the Dow, which is down 214 points, nearly 2% on the day.
The dot-com failures continue to mount, especially
throughout the remainder of the year. By fits and starts, the market continued to decline.
It was enough to force the Dow Jones down 616 points, a drop of 5.5%. The fragile technology stocks even harder hit, the Nasdaq index in freefall down nearly 10%. It lost a quarter of its value in just 1 week.
It is Armageddon in the global financial markets, and all investor confidence in the technology industry is instantaneously killed off. No investor wants to touch e-commerce companies, and even less so an e-commerce company based in China. Unfortunately, the massive challenge for Alibaba does not end there. In 2003, global e-commerce leader eBay announces its intention to conquer the Chinese market and its 1 billion consumers. To wipe out the competition, eBay acquires Alibaba's biggest e-commerce rival in China, eachnet.com, for around $200 million. At the time, eachnet already has more than 2 million users and 85% market share of the Chinese e-commerce market.
eBay bought a company in China, the #1 auction site in China, called Yichu, had 90+ market share.
This enables eBay to instantly dominate the Chinese e-commerce market and exert immense pressure on Alibaba.
Already a man, by then it was nothing to me but blinding.
Alibaba not only has to weather the worst tech bear market in history, but also has to fight off the world's largest e-commerce company with 95 million users.
Very interested in China right now. It could be one of our biggest markets.
What are Joseph Tsai and Jack Ma going to do? Despite this mountain of setbacks, Joseph Tsai, Jack Ma and the Alibaba team remain undeterred. They are now fighting for survival, and it is all or nothing. At this point, there is something very important to note. Out of all the founders at Alibaba, it is very clear that Jack Ma and Joseph Tsai are the two most important people by a big margin. And at this critical juncture, Joseph Tsai is far more important than Jack Ma in executing the comeback plan. He is the only one who has had many years of experience advising billion-dollar companies on corporate strategy. He is also no stranger to the cutthroat nature of business competition at the highest level. Using his years of industry experience, Joseph Tsai begins to hatch a legendary comeback plan to defeat Goliath. From the start, Alibaba has always been primarily a B2B e-commerce platform that helps small Chinese businesses sell their products globally. As a result, Alibaba does not serve many Chinese consumers, but mostly small Chinese businesses. Joseph Tsai realizes that this is a potentially fatal weakness. They are giving away market share to eBay by not serving consumers. Therefore, in mid-2003, Alibaba secretly launches Taobao, an online shopping platform that focuses primarily on B2C transactions and Chinese consumers. What Alibaba lacks in size in the Chinese B2C market, they want to make up for in speed, aggressiveness and attention to detail. Joseph Tsai and Jack Ma also make it a point to identify and exploit key weaknesses of the eBay marketplace. For instance, while eBay charges commission fees and listing fees to its users, Taobao has no transaction fees at all. Additionally, while eBay allows its users to remain largely anonymous, Taobao has a more trustworthy platform through transparent user interfaces and an escrow service for payment. The comeback plan is executed flawlessly, and Joseph Tsai begins to tap into his powerful investor network to launch an attack on Goliath with the support of large, wealthy allies. This time, investors love Joseph Tsai's brilliant comeback plan. This helps Alibaba raise $82 million for the war against eBay, making it the largest private equity commitment in the Chinese internet sector. The result? In just 2 years, Taobao's market share in China's B2C market grows from 8% to 59%, while eBay's China market share plummets from 79% to 36%. And now for the kill shot. After less than 3 years, eBay shuts down its Chinese website in 2006. Utter humiliation for the world's then largest e-commerce company.
eBay couldn't win there. They just didn't know what the hell they were doing.
Under Joseph Tsai's comeback master plan, Alibaba now dominates both the Chinese B2B and B2C markets. Goliath has been killed, and now a new king reigns supreme. However, Joseph Tsai and Jack Ma both know that they cannot stop here. The obvious next step is to transform Alibaba into an untouchable beast in China. How will they achieve this? The answer: more capital. In 2005, Alibaba raises $1 billion through a deal with Yahoo to acquire a 40% stake. This allows Alibaba to expand further into multiple horizontal markets in the following years. Some of these include Alipay for digital payments, Alibaba Cloud for cloud computing and AI technology, and AliExpress in the online retail space. As they have just won the war against eBay, Joseph Tsai and Jack Ma channel the same relentless spirit to these subsidiary companies, allowing them to dominate the competition in each horizontal market. As planned by Joseph Tsai, the financial wizard, and Jack Ma, the visionary, Alibaba rapidly transforms into a Chinese technology giant with large influence in several horizontal markets. After several years of dominating the Asian market, Alibaba becomes the hottest company in Asia. Naturally, a lot of international investors hype Alibaba as the next best private company to watch that's ripe for an IPO. With all his experience in the markets, Joseph Tsai instantly knows that the time to cash out is fast approaching. The best part? He is Alibaba's second largest shareholder, behind Jack Ma. It is time to complete the ascent to the peak of Mount Olympus. With his background as a corporate lawyer in New York, Joseph Tsai leads Alibaba's listing on the biggest capital market, the New York Stock Exchange. With Alibaba at the center of the global financial spotlight, the whole world now waits for him to carry out the most anticipated IPO in recent years. Alibaba rides the wave of hype even further by conducting roadshows across major global financial hubs like Shanghai, Hong Kong, London, Singapore, and New York. Alibaba finally lists on the New York Stock Exchange on 19th September 2014.
It's a pretty historic moment, so...
When the market opens, Alibaba's share price instantly skyrockets, exceeding everyone's expectations about the size of this IPO. Alibaba stamps its name in the record books as history's largest IPO, raising a total of $25 billion.
It's not my team. This thing will never happen.
Shares open trading at $92, 35% higher than the $68 IPO price. A proper IPO pop. Joseph Tsai is Alibaba's second largest shareholder with 3.1% of ordinary shares. By the end of the year, he easily achieves billionaire status with a net worth of $5.4 billion. Silverback status unlocked. He is now the king of the jungle and has exceeded the wealth of even the most powerful individuals in Wall Street. However, Joseph Tsai knows that deep down, this is still only another beginning for Alibaba and his own empire. With billions in public funding, Alibaba continues to ride the wave of hype and undertake new projects. For the next few years, it expands aggressively into different geographical markets and industries, generating more and more revenue each year. Alibaba's stock price also continues to rise. For Joseph Tsai, his net worth doubles to almost $10 billion, nearly putting him into the 11-figure net worth club. What do you do when you become a billionaire with almost $10 billion to your name and life starts getting boring? For Joseph Tsai, he does exactly what similar billionaire giga-chads with an interest in sports will do. Just like Mark Cuban, David Tepper, and Chamath Palihapitiya, Joseph Tsai begins to create a massive sports empire. Among his portfolio of sports teams, he is most famous for being the owner of the NBA Brooklyn Nets, after acquiring the team for a total of $2.3 billion. In addition, Joseph Tsai owns major sports teams in the NFL, the WNBA, the MLS, and the NLL, that's the National Lacrosse League. If American sports is the kingdom, Joseph Tsai is the Roman Emperor. The biggest takeaway that us young chads and chaddises can learn from Joseph Tsai is the sheer power and utility of being a polymath. Being a polymath single-handedly allowed Joseph Tsai to create the crucial comeback strategy that Alibaba used to defeat eBay and become the dominant force in China. Being a polymath requires deep knowledge of a variety of skills and knowledge areas. This can come in different forms, such as industry experience, technical knowledge, languages, skills, and professional network. Being a polymath is extremely difficult, but possible for any one of us. And Joseph Tsai's rise to GigaChat status is proof that being a polymath was what transformed him from a normal young Chad into the GigaChat billionaire that he is today.